This is Eric Mwatha with Mwatha.com. Going into the second trading week of 2012. Let's take a look at what the charts are looking at as we end the first trading week of 2012. It's been a nice up week. As you can see, the market did manage to gap up on the first trading day here. Had a nice gap up session and has been since holding very well, especially as far as the Nasdaq is concerned over the last couple of 4 days or so. Still trading around the 200-day moving average, which is slightly declining. We'll see whether that's gonna be telling us a market that is gonna be under some resistance or not. But as we stay around the 200-day moving average, let's see and wait. As far as I can tell, every time you see a market move to have a nice week or have a nice move, you want to look around for confirmation in other markets and in other sectors. Problem with this week one move in the market is that I see nothing but resistance in many of the places that I look for confirmation that the market wants to move. So as you can see also, there's if you check the highs on the daily chart for the Nasdaq, you'll see that we're right now contending with these highs as you draw the highs going back to July, highs in October, and also recent highs here today. So the market seems to be right back at resistance as far as the price channel is concerned. If you take a look at the RSI for the Nasdaq, and all you need to do here is take the highs of the market as far as the RSI is concerned. Take those highs here. You'll see that the market is now trading in this resistance zone in the RSI. So again, every time I look for confirmation that the market wants to rally, I'm walking into levels of resistance, and I think the market is probably going to pull back, maybe beginning from the second week of January or sometime in the short term. Take a look at the Dow, and here's a reason why those who want to stay long can stay long, is because now we are breaking out on the Dow above this 12,231 level, which is the highest weekly close going back to the week of October. So here, as far as the market and as long as the market remains above this level here, you want to play the upside, which means you want to play select sectors and you want to play select breakout stocks. So that being the case here on a weekly chart, as long as the Dow remains above that level, 12,231, you want to stay looking for possible breakouts in sectors that are already seeing market moving closer to 52-week highs. Now, if you take a look at the daily chart for the Dow, then you start seeing resistance level creeping up. And what I'm going to show you here is you see that the market is making nominal daily closing highs here, which is good. But if you take a look at the technical picture, you'll see that the technicals here are showing us there is resistance as far as the RSI is concerned. You take a look at the highs here on the RSI, and you do a straight line. We are hitting this level here, seem to be pulling back. So that is a confirmed resistance area. So again, even though the market is telling us that, for example, we see that the crossover between above the 50-day moving average moving above the 200-day moving average is generally a bullish scenario, unless the market can break out of this range and push the RSI to a breakout level. This, to me, the RSI is telling me that this brown line here is resistance, and unless the market can, like I said, find a way to break out, I'm going to look and assume that this market is pretty much going to be showing resistance there on the RSI, and it's going to be pulling lower for the next considerable number of weeks or days. Also, take a look at the MACD as far as the Dow is concerned. You'll notice that even though the Dow is making monthly highs here on the price, but you see that the technical picture on the MACD is moving lower, which is negative divergence, which suggests that a pullback is in the making. Now, Another thing that you can also consider here is take a look at the dollar as observed by UUP, and you'll see that the dollar is now breaking out on a week 4 breakout, which is a powerful thrust this week, very close to a 52-week high. And I think as long as the dollar is breaking out and stays above 22.49, you're going to see that the general market is going to find it very difficult to hold and sustain any rally. So as long as the dollar is breaking out and holding firm, I expect the pullback in the market to take place. Now, in this confusing market, one has to also pay attention to the fact that the VIX is really showing a terrible chart formation, as you see that the moving averages are crossing over and forming a bearish crossover pattern. So what this tells us is that there is a possibility that should we see, for example, that the dollar fails to hold its rally and the market break out of a range, then we have to play the upside, because the VIX here looks terrible. This looks like a broken chart. So unless it can fix itself immediately, this one is a tell that the market might break out of those ranges. But like I said, until I see the market break out, I'm going to default to the market pulling back here, and we'll see whether this VIX or the volatility situation is going to fix itself. Right now, as far as I can tell, this is a negative or a bearish VIX volatility chart, which tells me to anticipate a breakout in the market. If the breakout takes place in the market, you want to play that breakout. Otherwise, we might see this VIX recover with a strong move and the market continue going lower.